Hey, what's going on everybody? In this video, what I want to do is I want to run through my dividend investing portfolio and just go through each position that I have. I hold 33 positions and my account is just over $10,500. It's in a tax-free savings account in Canada and all inside of Wealthsimple Trade, which is a really great broker if you do want to buy and sell trades with no fees. It works really well if you are just buying in your own currencies. So for example, if you live in Canada and you're only buying stocks on the TSX in Canadian dollars, it works perfectly for that. And that's what I've been doing as well. Especially having everything in the tax-free savings account, I don't pay tax on it and I also don't pay trading fees. Yeah, it's just really nice setup. So let's just take a quick look through here at all of the positions that I have. So we can just run down the list here. They're in alphabetical order, and I think I want to open up each one of them individually, because normally what I do is I'm in a different screen. I also track everything in a Google Sheet and just talking about like going through the portfolio in that sheet. But I think today I just want to hop in and just talk about each of the positions that I hold in this account. So yeah, let's just jump right into the first one. It's Allied Properties Real Estate Investment Trust. These guys, you can see if we just quickly scan through some of these different time frames. 1 year, you can see they were impacted quite heavily around March this year. And but otherwise, in the previous couple of years, they were making some pretty nice upward trends in here. So these guys make up 4.87% of my total portfolio. I have 13 shares. My average buy price was $37.47, and right now they're sitting at $37.98. So basically, I'm just up a little bit, almost $7, just 1.42% from my average buy price. That's nice, but they have a pretty healthy dividend here as well of 4.23%, and we can see some of the other information in here. They have a market cap of almost $5 billion. It's a lot of money. Sounds so casual just to say $5 billion like that. But yeah, PE ratio of 6.93, and then we can just see that they are a real estate investment trust. And so they have a lot of different office environments and things like that. But yeah, I'm hoping that they will eventually start to recover. We'll see where this goes. As long as it's not dropping down too much, then I don't mind sitting on this dividend and just taking it as it comes, you know, as time goes on, and hoping we can get back to this nice upward trend. The next one on the list was Algonquin Power and Utilities Corp. This is a utility company. We can jump straight down here to check out their bio. Basically, they have a lot of green power, renewable energy, and also a ton of thermal generation, so natural gas and things like that, water distribution, wastewater collection. They're just a basic utility company. We can see here that their yield is 3.66%. They're making up 4.2% of my portfolio. I've got 19 shares in them, and I'm up about 9.56%. So if we just jump to the 1 year chart here, we can see also they were impacted around March, but have been steadily recovering ever since then. And looking at the 5-year trend, nice upward trend here, just interrupted briefly and then just right back on. So definitely I'm enjoying having these guys. My average buy price was $20.47 and we're sitting at $22.43 right now. So I would like to eventually add into these and continue growing my position here. The next one on the list is Acon Group. This is a big construction company, so we can just quickly look at their 1 year chart here. Again, impacted in March, slowly coming up, but when you look at the 5-year chart, they don't have such a nice upward trend. They're kind of all over the place. They're a little bit cyclic, but that's okay with me because they do pay a nice dividend down here of 3.78%. And they're a pretty big, serious company. So I have hold 11 shares in them, total value of $187. Basically, I bought in at $13.96, and now we're sitting at $17. So yeah, up 21%, almost 22% on this position, which is really nice to see. And yeah, we can see in here that they're just a big construction company. They do all sorts of different types of things in the industrial sector. So let's jump into the next one, which is Alimentation Couche-Tard. These are the convenience store guys and gas stations. Let's close that. You can see here, again, impacted heavily back in March, and some good recovery here. There was just, do you see this drop here? I got in just somewhere around here, but basically we're expecting that to recover hopefully, and these guys have solid financials if you look into them. I'm already up 6.5%, and I just bought them a few weeks ago, I think, on this little dip. But yeah, I only have 3 shares in them. It's something that I would really like to add more to before this climbs up too high, because I'm bullish on them that it will continue climbing. But they only make 1.2% of my portfolio, obviously with such a small volume here. That makes sense. But yeah, they have a very low yield, but also like a pretty good growth possibility or potential. And yeah, huge market cap here and some other information, PE ratio of 12.26. And yeah, you can see here they're the Circle K, Couche-Tard. Their shops are all over the place and all around the world too, not just in Canada. The next one is BCE, and this is Bell, the media company or the phone company. So you can see here, slammed a bit in March as well. Have pretty much stayed flat since then. And if you look at the last 5 years, not a lot. If you do look, Bell's been around for forever though. If you go into Yahoo Finance or something and pull up one of their charts for like the last 30 years, you can see they're just slowly creeping up. But they also have a massive dividend here of 5.94%. It's really nice to have. So I've been jumping in on them because right now they've been hovering around the price that I actually bought. So I bought in at $55.61. I've been averaging in a little bit as it's been kind of trending downwards here in this section. But you can see overall I'm just up $3 on them, but my total value is $670. So they make up a pretty good chunk of my portfolio, 6.62%. And I'm just looking to sit back and just take that dividend as we go into the future for a very, very long time. But yeah, huge market cap, PE ratio of 22. And what else do we have? You can just read quickly. Here's some of the brands that they have, but I'm pretty sure most people will be familiar with Bell at this point. The next one is Brickfield Renewable Partners. I really like the renewable energy companies. I honestly think it's the future. It's where we're all going. And I'm a big fan that that's the direction that we're going in. And so I'm happy to hold companies in renewable energy, but also they're doing really well lately. The 1 year trend you can see here, it's been climbing pretty steadily since March. And when we look at the 5 year trend here, it's just like going crazy in the last couple of years. I think honestly, the renewable energy space has a lot of room yet to grow, looking very long term in the next few decades. So I definitely want to be buying more renewable energy stocks kind of, as soon as possible or in this year or something, because I think, 20 years down the road or something like that, will be sitting pretty nice. But I only actually have one share of them. It is something I need to add more to, but I'm up 30% on this one share, which is quite nice. But yeah, just the one share only makes up 0.6% of my portfolio. And you can see down here, not sure why they don't have a P to E ratio. That's okay. But they've got a nice yield of 2.92%. And you can see here they've got, a lot of renewable energy projects all over the world. Borlex, this is another basically renewable energy utility company. You can see here the 1 year, just nice steady growth. And right around here, they just shot up. You'll see this trend with a couple of the renewable companies. And when you look at the 5 year trend as well, it's just like flying up here in the end. So again, very happy to have some shares here. $152 total value makes up 1.5% of my portfolio. And I'm up 29% on this position. But yeah, when I was coming in here, you can see the yield is 1.34%, but the P to E ratio is insane. I need to look into what this actually means for me, and if I should maybe, I don't know what to do with that. I maybe need to sell these, and if it might drop down a little bit, but still, I think it's okay. I'm going to plan to hold on to them until I do more research about what's going on here. But it is interesting when you hold these companies with like a low dividend yield, and then they shoot up 30%. Like I've got probably 25 years worth of this dividend already here on my 3 shares. So that's something interesting to consider. But like I said, I still am a believer in renewable energy and where that industry is going. So we'll see. I'll probably try to hold on to as many of my renewable stocks for the long term as possible. The next one is Bank of Montreal. This is one of the massive banks in Canada. Should be a familiar name. They are recovering as well pretty well from the drop there in March. And you can see here in the last 5 years, they've been like not having too much growth. But again, if you come down here, looking at their yield of 4.33%, it's quite nice. It has some good growth factors in there as well. But with 4 shares, it makes up 3.87% of my portfolio. And yeah, you can see some of the other fundamentals here. And it was basically, it's just a bank everyone knows about BMO. The next one is also a Bank of Nova Scotia. You can just jump straight to the 1 year. See, we've jumped up quite a bit in the last few months here. And overall, not experiencing this like general upward trend in the last 5 years. But still, well, yeah, up 23%, but not this like crazy hockey stick shape that we're getting with the renewable companies. But again, these banks aren't going anywhere. And they pay a nice dividend of 5.15%. And yeah, I've got 3 shares in there, makes up 2% of my portfolio, and I'm up about 27% almost with this, which is really nice to see. So yeah, again, just a quick bio down here if you're looking for it, but this should be a well-known bank in Canada. Okay, so the next one is Ccl Industries. These guys make like stickers and film wraps and a lot of plastic packaging and stuff like that. So if we jump into the 1-year chart, we can see they got hit pretty hard in March, but they've been recovering quite well. And overall, though, in the last 5 years, yeah, they're doing pretty well. I think you can also zoom out a little bit and get a better perspective on where they're going in general. And Yahoo Finance or something, but I just hold 1 share in them. I wish I held more because it's already up 20%. And again, yeah, these have a relatively low yield right now of 1.17, but they are definitely positioned well. And I think I'm not planning to sell this one anytime soon. So you can just see down here, they have a lot of different brands. I recognized Avery from like printing shops, like Staples and things like that. There's Avery stuff. And yeah, all this different types of plastic wrapping and stuff like that. And quite a few different business models that they have under the one umbrella of Ccl Industries. So the next one is EIF. This is Exchange Income Corp. These guys are like have a lot to do with aviation, especially in northern Canada. So we can see here they're recovering pretty well since March as well. And when we look at the 5-year, they hop up and down a little bit, but generally they have a pretty strong dividend here of 6.07%. And if I remember correctly, this one is monthly, which I really like monthly dividends. So I hold 5 shares in them. I'm up 20% on my position. And they make up about 1.9% of my portfolio. Yeah, so you can just see here a lot of stuff, aerospace and aviation, chartered airline services and medical services. They do like helicopter ambulances and things like that. But yeah, I've been in Northern Canada before, and I don't know, I think some established businesses up there, especially related to transportation, I don't see them going away anytime soon. All right, so the next one is Emera Ema. This is a utility company. You can see here a little bit of a shock in March and then have been relatively stable, but a little bit of a downward trend since March. But you can see that we had a big boost right before. And let's just jump in here. So let's take a look. They make up 5.6% of my portfolio. And as the price has been dropping, I've been adding more shares. So that's why it's a little bit high. I'm actually down $20 on this, or 3.48%. But I'm okay with that because we've got a pretty good yield here, 4.78%. And again, if you look at the charts for more than 5 years in Yahoo Finance or something, they do pretty well. They've got a market cap of $13 billion, PE ratio of almost 15, and you can see here a whole bunch of information about their business operations throughout Eastern Canada and Caribbean and a bunch of different places as well. All right, so the next one is Fortis, an all-time favorite for myself and for a lot of people. When we look here at 1 year, we can see it's pretty much flat since March after that initial recovery, but we've got a big boost here. And if you look again in Yahoo Finance of these guys in a time frame that's more than 5 years, they are just doing well. These guys are a dividend aristocrat, I think, and they've just got a very solid track record of growth and dividend growth as well. So I think this is my biggest position actually, just under 7.7%, and I'm up just barely 0.82% on them. That's because it has been pretty flat since I started buying, but we've got a big potential for growth here as well going forward. Big market cap, yield of 3.73%. These guys are not going anywhere, and yeah, you can just run through here. They've just got a whole bunch of different utility businesses throughout Canada and some other regions as well. Moving on, the next one is Granite Real Estate Investment Trust. This is another REIT. These guys, they recovered well from the pandemic, and when you look at it before that, they were just briefly hit, and they were just continuing their upward trend basically. It's leveled off a little bit here in the last little while, but that's cool with me. I've got 7 shares in there. I'm up 0.05%, 28 cents on total value of $500. So basically no change for me. But again, these guys have a long history of growth, a good yield of 3.64%. That's also always growing. They have nice dividend growth, market cap of $4 billion. And yeah, you can just see that they're a lot into industrials, warehouses, and logistics properties throughout Canada, North America, and Europe. So the next one is Great West Life Co. These guys are an insurance company. You can see they've been hit pretty hard in March, and again, they're steadily growing back. In the 5 year, they're actually down in the last 5 years, but when we come down here, we can take a look at it. They've got a very strong dividend yield of 5.85%. Huge market cap as well. They make up just almost 0.9% of my portfolio, and they're up at about 10.83% since I started, and I've actually been thinking to add some more into these guys lately, but we'll see in the coming weeks. But yeah, you can just get a good idea of what their business is. A lot of different insurance stuff throughout Canada, United States, and Europe. So the next one in here is Hydro One, just H on the TSX. This is another utility company. You can see slow and steady growth since March there as well. And looking at the 5-year, it was decreasing a little bit and then shoots up again. This is also another one that's worth checking out on Yahoo Finance for the longer time frame, like beyond 5 years. But yeah, I've got 5 shares in there. They make up 1.5% of my portfolio. They've got a nice yield of 3.35%, and yeah, you can also just see basically they're doing a lot of work with transmission and distribution of electricity, and a little bit here also in telecoms, but primarily known as a utility company. So the next one in the H category is H&R Real Estate Investment Trust. Again, another REIT. We can see here slammed in March, pretty much level here, and then they've been boosted up, and then we're going to see here if they can climb again. Looking at the 5-year, they were sitting up well above $20, and let's see if we can get back there again. I bought 10 shares, I think, yeah, just under $10, somewhere around here, I think, and they make up 1.3% of my portfolio. They've got a nice yield of 6.83%, also paying monthly, I think, can't remember. Yeah, I'm pretty sure they pay monthly. But as with all of the REITs right now, pretty risky to be holding, so I'm just holding on to them and just seeing where it goes. But it would be really nice if it could recover, because I do really enjoy this nice yield and monthly payments. But you can see here they're into office, real estate, industrial, and residential properties. So the next one in line is Energex Renewable Energy. This is another utility company focused on renewables. We can jump in here, look at their 1 year. They also, like I mentioned before, so a lot of the renewable countries just boosted up pretty hard in the last month or two. So same with these guys. And in the 5-year, they're also experiencing some pretty crazy growth in the last few years here. So I have 3 shares here. They make up just under 1% of my portfolio. They've got a yield of 2.48%, which is pretty decent. And you can see here some more information about what they do. They've got some wind power, solar, site development, hydro, and stuff like that going on. The next one is Lubla. This is like Superstore and No Frills, big grocery chains and brands like that, no-name brand. They've been on the decline for the last little bit, and if you look in the 5 years, they're not seeing any sort of particular pattern here, but a big boost about halfway back. These guys make up 3.7% of my portfolio. I'm actually down $5 on a total value of about $370. So we've got a yield of 2.06% and pretty big market cap. These guys I've bought basically as a growth potential. They have a pretty strong history of dividend growth and a good prospect looking forwards. So you can just see down here, PC Optimum, drugstores, retail, financial services, basically it's Superstore and a couple other brands. So the next one is Manulife Financial Corp. This is another insurance company. You can see here in the 1-year chart, they're recovering steadily since March as well. And you can see here, no serious particular pattern going on, but over like a longer duration, you can kind of see the nice upward trend. They make up 1.4% of my portfolio, and I'm up 29% on this individual position so far. So yeah, they've got a dividend yield of 4.6%, almost 4.7 at the moment, and huge market cap as well. And you can just see in here all of the different types of insurance kind of things that they offer throughout Canada, US, Asia, and all of the different things that they're doing. So moving on, in the M section, we have Metro. This is another supermarket chain. They've also been on the decline in the last few months, and so I jumped on that along with Lubla and ATD, Alimentation Couche-Tard. I jumped in on all at the same time. But you can see in the last few years, they've had some pretty good growth. When we look at my portfolio, they make up about just under 5% of my portfolio, actually, with just about $500. I'm down 2.6%, which is okay. I bought these also as basically a growth opportunity. They've got a yield right now of 1.63% and a very strong history of dividend growth and a good prospect looking forward as well. But yeah, you can just see they distribute food, pharmacy products, so they have a network of supermarkets and stuff, and they're headquartered in Montreal. The next company that's in my portfolio is Northland Power. When we look here at the 1-year trend, basically a straight line going up, which is nice to see, and 5-year just like a crazy boost at the end as well. I only hold 3 shares in these for a total value of about $153, but I'm up 20% on my position, and you can see here that they make up about 1.5% of my portfolio. And we've got a yield here of 2.45%, and what I really like about these guys is it is a monthly dividend as well. So you can just see down here that they have a bunch of stuff going on with natural gas and also quite a few renewable energy projects. Okay, so the next one, alphabetically speaking, is Northwest Company. This is a grocery chain in northern Canada as well. You can see here, nice recovery since March. And nothing crazy going on here, but they have a nice dividend yield of 4.05%. And yeah, anyways, they make up just under 5% of my portfolio as well. And I'm up just 3.9% on them. But again, I'm kind of into this whole Northern Canada thing. I think the businesses that are there, established businesses, like people there need services, of course, and they're not going anywhere. And so this is a company that I'm quite happy to be holding because I don't see it going away anytime soon. And yeah, you can just read down here, providing a lot of services to rural communities and whatnot throughout Northern Canada and also some other regions too. Okay, so the next one is Northwest Healthcare Properties. This is a REIT as well. So we can check here. They got slammed in March. Nice recovery, not as drastic as negative of an outlook as some of the other REITs. They've just been climbing up again, and if you expand this beyond 5 years in Yahoo Finance or something, you can see a nice upward trend. These guys are actually really into medical properties, so I don't actually have any direct stocks in healthcare, but this is the closest I get. They have healthcare facilities throughout many different regions, Europe, Canada, Brazil, Australia, and the surrounding areas as well. They make up 3% of my portfolio. I'm up 5% on them overall. But they've got a solid yield here of 6%, which is super nice to see. Really brings up my average. And yeah, the next one is Ryokan. These guys are also a pretty well-known REIT in Canada. You can see here, it's slammed in April. Some nice little jumps as we go on, but still pretty flat recovery. Again, they were sitting like some of the other REITs like H&R over $20, and now they're like down below 15 or something. Or not below 15, they're at almost 18 right now. But yeah, hopefully that can recover one of these days. Now, Ryokan actually did cut their dividend. I can't remember when it comes into effect. I think it's March or something like that. They cut a third of the dividend, so that will be dropping off. But for now, the yield is 8.12%, and they make up 2.6% of my portfolio. And overall, I'm up 29%, which is definitely not bad. And when you come down here, you can just see that like their main business is shopping centers, and they also have grocery, retail, and all sorts of different things. All right, so the next one with the letter R is Transalta Renewables. These ones have just like shot up crazy as well in the last little bit, dropped off a bit, but here we go. When we look at the 5-year trend, you're seeing the same thing with all of these companies involved in the renewable energy business right around here, starting to increase rapidly. So when we look at this, I've got about $500 in here, and overall I'm up 36% in this position, so that's really nice. I bought in at $15.93, and right now they're sitting at $21.75. They make up almost 5% of my portfolio as well. A nice yield of 4.33%. And you can just see here they're into a few different segments, a lot with wind, but also they're using a lot of natural gas in here as well. Okay, so the next one is Severia Corp. These guys make like accessories for kind of old and disabled people, like elevators for like people's homes, and like stair lifts and wheelchair lifts, like for taxi cars and things like that. Again, you can see they've made a pretty nice recovery since March, and overall they're kind of hectic all over the place, but in general they have a strong dividend here of 2.74% with some good growth behind it. And they make up 1% of my portfolio, and overall I'm up 22% on this position. So yeah, you can just get a good idea for what they do down here as well. Just a lot of stuff to do with mobility and machines for accessibility and stuff like that. So moving on with the letter S, we have Shaw Communications. These guys are a telecommunication company based in Alberta, I think. When we look here in the last 5 years, they're actually down in the last 5 years, but they do pay a monthly dividend and their yield is 5.26%. So I do enjoy getting the checks every month from them. They make up also about 5% of my portfolio, and I'm down $11 on that. But I can remember, like, ever since I started paying for the internet, I've been paying it to Shaw. These guys I really don't think are going anywhere, and at some point I would like to see it come back up. And until then, I'm not too worried about it. I'm just going to take that monthly dividend and just sit on that $500 for a while. But yep, when we come down here, you can just see, yeah, they're headquartered in Calgary, and they just do internet, video services, Wi-Fi, phone plans, and things like that. Okay, so the next one that starts with the letter S is Smart Centers. This is also a REIT. We can come here and just take a look in the last year. Some big jumps, but overall a slight trend of recovery here. Yeah, you can see the 5-year here as well. They were sitting around $30 and they're kind of creeping back up just over $20 now. So yeah, they make up 2.6% of my holdings. I'm up 1.6% on that, so that's fine. But they've got a super huge yield of 7.7%, which is insane. But yeah, you can just see here they focus on the development of retail properties, mixed-use development, and retirement homes, self-storage, like all sorts of different real estate-related things. Okay, so the next one is Telus. This is also a telecommunication company in Canada. I'm sure a lot of you guys are familiar with them. They sell internet plans and phone plans and all sorts of things, but they've been climbing pretty nicely since March. And over the last 5 years, just very strong growth. This is also a really good one to take a look at in like the very long term on Yahoo Finance or something. They're just like driving up non-stop. So this is definitely something that I want to add more shares to. I only have $200 in here. They make up about 2% of my portfolio, but I'm up 16%. And I keep wanting to add to them, and this number just keeps climbing. So I think I should actually jump in on that one of these days pretty soon. But yeah, they've got a nice yield of 3.88%, also solid dividend growth that you can look up. And yeah, you can just see here they're a telecommunication company and do all sorts of cloud services and communication stuff. All right, so the next one here is Toronto Dominion Bank. This is one of the big banks in Canada. We can see here in the last year they had a huge boost a few months ago, and then just looking in the last 5 years, some nice upward trends here with a bit of hecticness going on, but a pretty good recovery here actually towards the end of last year. So I've got 5 shares in there, total value of $373. Overall, I'm up 22% on this position. They make up 3.7% of my portfolio. And yeah, they've got a nice dividend yield of 4.23%. And you can see here they're doing a lot of different banking services throughout Canada and the United States. All right, we're almost at the end, but this one is pretty special because this is my single best performing position that I have so far. I only have 1 share in them, but this is Tfi International. This is like a courier company. You can see I have 1 share at $92. But when we look here at the last year, they were just climbing very steadily and then boom, jumped up quite a lot. And looking at the last 5 years, like these guys have just gone out of control, 360% in the last 5 years. So let's take a look down here. I'm up personally 46% on this. Man, I wish I bought more of these. I wasn't really unsure about them because I wasn't too familiar with them, so I only bought 1, but it's very nice to be holding on to. The yield is just 1.16%. So this is another crazy one. Like, I have like, if I just held this for the dividend, you know, of course the dividend is growing, but I'd have to hold this for like 40 years to get this amount of payment. So I've got like, I need to think about what to do with this as well. Maybe I should sell this and invest into some of the other ones that have a higher, you know, immediate growth potential, or maybe, I don't know, if it's just going to keep going. It's really hard to say. Either way, really happy that this is in my portfolio for the moment. And yeah, they've got a lot of growth potential as well here. They are all into courier businesses, trucking, logistics, and all sorts of stuff like that across North America. And this is finally number 33 in alphabetical order, WCN for Waste Connections. This is like a garbage management company and recycling. You can see like some pretty solid growth here. They've leveled out a little bit since I purchased. So you can actually see that I'm down 2.85%, but basically their shares are quite expensive at about $130, $126. And so I'm in it for about $500, or about 5% of my portfolio. They have a relatively low yield of 0.81%, but a very good outlook on growth. And yeah, we can see down here they're a solid waste service company, including waste collection, transfer, disposal, non-hazardous stuff, waste treatment. Like, these guys are all over the place. Super boring company, but very, very safe, and it seems to have a very good growth potential. So yeah, guys, that's everything. That is all 33 positions that we just went through. And again, we can just kind of slowly scroll through here just to get a reminder of what the tickers were if you wanted to look any of these up in Yahoo Finance or whatever your favorite kind of research tool is, or broker. But yeah, that's it for now, I think. We've been looking at Wealthsimple Trade. Again, I really like using this platform for just buying and selling stocks in Canada because there are no fees. And I'm also buying, you can see here, in my tax-free savings account, which is pretty great, not having to pay fees or tax. So if you do want to try it, there is a link in the description below. And otherwise, just want to say thank you for watching this far. If you guys liked the video, make sure you hit the thumbs up. And I will see you next week when I go through with the next round of actually purchasing more stocks into this account and then updating my dividend tracking Google Sheet. So guys, thanks a lot, and I will see you there.